Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. If you like making money or if you like financial education type things where you're looking for undervalued investments, typically it's going to be in the commodity sector at the moment. This channel's for you. Subscribe. If you like this content, give me a thumbs up and please leave comments and questions below in the comment section. I want to talk about a market update. So we're going to jump right in here into the presentation. And I'll do a quick synopsis of what's going on in the market and my opinions of it. So overall, we're going to go over the 10-year treasury yields, some indices, and some commodity-specific ETFs. This will give you a pretty good picture of what's going on across the commodity spectrum and even across the entire market. So today, what we're looking for is yields to kind of stabilize instead of just moonshotting or going up at a very strong uptrend. We did have a little bit of a down day today. It was down 2.89% in terms of the 10-year U.S. Treasury yield. So when we look at these things, Treasury yields going up means that expectations for inflation are growing. When Treasury yields go down and we see a big downtrend, usually people are going into bonds, meaning that people are worried about the market and they're worried about deflation. So right now, what I'm seeing is that people are having high expectations of inflation and a recovering economy. At least that's what the bond market is saying. So let's look at some of the indexes. So this is the S&P 500 index. And you can see this thing's in an uptrend. It's in a nice uptrend. And, does this make sense? And I would say yes. Because if you think of things, they just filled the banks and people's accounts with stimulus, and those stimulus, monies are going into those accounts, and they're gonna be unleashed into the economy at some point. And I think that some point's coming up very soon. You're going to see restrictions start to lift. You're going to see money velocity start to kick up. So I think that yields will continue to go higher. Real estate money's getting loaned into real estate as well, and we're seeing housing starts go up. So there's going to be inflation from real estate. So you're going to see inflation from real estate and you're going to see inflation from stimulus checks coming into the economy. And I think that's going to do well for the S&P 500 in the short term for sure, because companies are going to make more money as that stimulus works its way into the economy. And that's what we're seeing. We're seeing strength in the S&P 500. I don't think we're going to have a crash. I think it's going to strengthen. And I think that's going to be good for commodities as well. And we're seeing strengthening coming from the Nasdaq composite. We had a nice big pullback here. If interest rates continue to go up, I do think that this is going to come under a little bit more pressure. If interest rates stabilize and go sideways, I do think the Nasdaq will go up because we've got a lot of money in this system sloshing around. Got to go somewhere. So I don't know if this is the ultimate top. I'm starting to get a little more bullish on it on the short term. Long term, if interest rates continue to go higher, this is going to come under pressure. But remember, they're going to come out with probably yield curve control or something like that, the Federal Reserve, and try to hold interest rates down, which will prop up the growth stocks. Now let's get into some of the commodities. This is the North Shore Global Uranium Mining ETF. We've got a nice big, this is a downtrend break here. You can see it pop up and then the nice dead period here. And then it took off. One thing to notice here though, this move here is a certain degree distance up. We had a pullback. It's a smaller up here and then a pullback. And then we have a smaller up here. What I think is going on is the uranium price isn't moving very much. It's kind of gone sideways at best. It's around $30. These stocks are anticipating a uranium price move. And right now you can see that the up periods are contracting. It's meaning that as we get higher and higher, there's less and less buyers out there. And we're waiting for, I think, the market is waiting for price to move, the uranium price itself. And that's why you're seeing that contraction of the large up movement over these few months. So we have a movement here, movement 1, movement 2, movement 3, and you can notice that movement 1's larger than movement 2, which is larger than movement 3. So we're contracting as it goes up, less and less buyers, and I think we're just waiting for the uranium price to move. Once the uranium price moves, then I think these contractions will kind of resolve itself. And if we don't see a price move, I think this could potentially go sideways or pull back a little bit over the short term. This is the global X copper miners. We're starting to see the same thing here. See this move here up, a smaller up, and then we're starting to pull back a little bit. We do have a contraction here. It does look like there's some support here, but I'd be looking for. We've got a nice right here is a bearish engulfing candlestick. We do have nice big momentum down. This could pull back a little bit, but I wouldn't be quick to say that this thing's just going to fall. We do have declining volume here, so I have this pullback could be working its way out. Maybe we go sideways and grind sideways a little bit more. I don't see a definite bottom, like a bullish engulfing or something signaling a short-term bottom. So right now it's sideways, down to sideways, until we see an indicator that we're going to turn to the upside. Now here's the VanEck Vectors Rare Earth Metals. This is similar. We're in a pullback mode right now, but it's looking pretty good, and we're contracting down where the opening and closing prices are starting to equal each other. We've got a decline in volume, so this pullback it's resolving itself where the buyers are starting to equal the sellers. So I like kind of buying in these areas in this. I think coming up over probably the next couple days or weeks. Hopefully, it's not putting in a shoulder, head, shoulder. It doesn't look like it is. I don't see a bunch of bearish engulfing patterns anywhere or bearish piercings. I just think it's just a little normal pullback before this thing moves to the upside. That's my take on it. XLE, we're still in this uptrend. We got the trend line here. So this is the energy select sector. So it's looking good. This thing, remember, this thing's gone up quite substantial from the bottom. I mean, it's gone up a lot. But it is contracting. It is coming to meet this line. So we'll see what happens right here. I'd like to see a nice big bounce and it continue higher. That's what I'd like to see. Same with OIH. Same thing right here. You draw a line through it. We're right at that line, support line. And we'll see which way it breaks. Coming into the summer, oil is typically pretty strong. So I expect oil, even if this were to go down a little bit, to move on up over the summer with increased demand. That's my expectations. SILJ, looking pretty good. We got this downtrend. It broke, came back up. Looks like we've got another downtrend here. And we had a false breakout. It pulled back underneath, came back out. So we're above this trend line here. We got a nice big bullish engulfing, another bullish engulfing, and we've got small little down days. I think it's still primed to go to the upside. I know a lot of people, they're saying gold's not going to go back up or silver's not going to go back up, but looking at this chart, it doesn't look that bad to me. I don't necessarily prescribe to some of those things that they see. I don't see it. And here's GDX. GDX is the Gold Miners ETF, and it's posed. It's right up on it. All it has to do is punch through right now. And we've got a nice good run up. We've got a bullish engulfing, another bullish engulfing, and we've got small down days. So it's controlled pullbacks. We just need the buyers to step in and punch it up. If they don't step up and buy it here, then I think we're going to continue to move in this downtrend line below it until we punch through it. I mean, that's as simple as that. We're in a downtrend until the downtrend's broken. So looking at a lot of these things, oil has come under pressure. If you look at some of the individual stocks, they are pulling back. Some of these other ones, they're still in downtrends. GDX, SILJ is obviously not in a downtrend. That's kind of broken its downtrend. So it's still there. We're just waiting for the break, waiting for the buyers to step in. If the buyers decide to step in, we go on up. If the buyers don't step in, we're going to continue in that downtrend a while longer. How long? Not exactly sure. I'm not the one pulling the strings here, but what I'd like to see is the buyers step in, see the indications of bullish engulfings, bullish piercings, blow through the downtrend line, and I'll be clapping and going, good job, it's time to go. Get on the bus, let's go right on up. But it's not there yet. If you guys like this content, give me a thumbs up. Leave any questions or comments below. I'd like to hear your guys' opinions. And thank you for listening. This is Finding Value.